This Swanson Reed presentation will provide an update on the recent changes which requires the ATO to publish R&D expenditure claim information. As part of the recent changes to the Research and Development Tax Incentive from 1 July 2021, the ATO is now required to publish information each year about R&D entities and the R&D expenditure they've claimed. The ATO is required to publish the data 2 years after the end of the financial year that the data relates to. The delay in doing so is designed to address any perceived commercial sensitivities relating to the data. The ATO published the first report early in October 2024 for FY22 claims and will continue to publish it annually. The aim of this measure is to provide transparency on the benefits derived from the program, to boost competitiveness, and to improve public accountability for R&D claimants, and also to encourage voluntary compliance. The information to be made available to the public includes the entity name being the name of the entity that has claimed the R&D tax incentive, the ABN or ACN being the Australian business number or Australian company number associated with the entity, and lastly, the total R&D expenditure. This is referred as the total notional deductions claimed and can be found under Label Z in Part A of the R&D tax incentive schedule. It will be the total expenditure in R&D minus any feedstock adjustments which can be found in Label B, Part B of the R&D tax incentive schedule. Notably, confidential project technical details will not be published. The figures will be published based on the information provided by an entity in their company tax return. In the event that an amendment is made, the figures will be based on the amended return. If the ATO makes amendments to these labels, the information will reflect the company return prior to the amendment. Where an R&D entity is part of an income tax consolidated group or multiple entry consolidated group, the subsidiary members are treated as part of the head company for income tax purposes for as long as they remain part of the group for income tax purposes. The published total R&D expenditure amounts are those disclosed by the head company of the consolidated group or the multiple entry consolidated group. This measure marks a very substantial shift in the R&D tax incentive program. While it has been a commonplace for grant recipients of other industry assistance, such as those receiving accelerating commercialisation grants, to be published, there has never been uniform publication of claimant details for R&D expenditure. A positive of this publication is that it provides taxpayers with the opportunity to visualise how diverse Australia's R&D really is. Coming up is a summarised snapshot of the 20 largest and 20 lowest claimants in the 21-2022 income years, as classified by their sectors. The top 20 claimants can be classified in the following industry sectors. Number 1, healthcare. Number 2, software. Number 3, engineering. Number 4, food and beverage. Number 5, green energy. Number 6, waste management. Number 7, employment services. Number 8, telecommunications. Number 9, gambling and entertainment. Number 10, various conglomerates. The lowest 20 claimants can be classified in the following industry sectors. Number 1, healthcare. Number 2, miscellaneous or no longer existing entities. Number 3, engineering. Number 4, green energy. Number 5, software. Number 6, food and beverage. We believe that there are both benefits and concerns about the publication that should be considered. Some of the benefits may include an increased level of transparency. The publication of R&D expenditure information increases transparency in the sector, which can lead to a better understanding and increased trust. There may be also an increased level of accountability. By making the information public, companies will be held accountable for their receipt of taxpayer-funded industry assistance. The publication may also encourage voluntary compliance. Companies may be more likely to refrain from aggressive or fraudulent R&D claims, knowing that the information will be public. And lastly, the change may allow companies who invest in R&D activity to be publicly recognised among their peers for their R&D investment. While some of our concerns from the transparency measure may include privacy concerns, some companies may have concerns about the disclosure of their financial information and may view this measure as an invasion of privacy. The measure may also result in assorted information. Some companies that have large R&D expenditure investment may choose not to claim R&D expenditure under the program or not to register all expenditure due to various reasons, including resource constraints or commercial decisions such as accumulated tax losses. This inaccurate representation caused by the mandated disclosure could lead to a distorted picture of a company's actual R&D activity. The publication of R&D expenditure could potentially also give competitors insights into a company's R&D activities. This could lead to a competitive disadvantage and potential media scrutiny, as companies and industries which receive significant industry assistance through the R&D tax incentive may become target through media scrutiny. And lastly, the new requirements may consume regulated resources to administer. The move towards greater transparency is noteworthy and consistent with larger global trends in tax reporting. However, it has also led to public policy debate about the R&D tax incentive and its claimants. Since the data was published, there has been a high level of media discussion on the types of companies that claim R&D activities and the magnitude of the expenditure. This discussion possibly led to the significant policy move announced by the government in 2024, which proposed to exclude from eligibility activities relating to gambling and tobacco. Swanson Reed believes it's the media's right and role to comment on the release of now public information. However, given the complexity of the R&D tax incentive, it must be emphasized that it can be very misleading to form a view about a company's investment in R&D or behavior as a taxpayer on the single basis of an R&D expenditure figure, which may or may not appear in the transparency reports. For example, we are aware of many companies investing significant amounts in R&D expenditure that is not claimed under the R&D tax incentive, or not claimed to the extent of their full legal entitlement. These companies' absence from this transparency list may lead one to conclude that they are not an innovative company. However, their admission may be for valid commercial reasons, including that they may have had group turnover greater than 20 million, yet have significant accumulated tax losses, meaning that they cannot commercially benefit from the R&D tax incentive in near term, or that their technical staff may not have the bandwidth to complete the R&D application or maintain the requisite supporting information. The figures published in the transparency report alone do not allow a meaningful analysis of what the reported entity's R&D claims may actually be costing taxpayers. For example, the report does not disclose group turnover or whether the company may claim under the refundable or non-refundable tax offset. For companies claiming the refundable tax offset, 43.5% for most companies, it is not widely reported or understood that when companies claim their 43.5% R&D offset, they forfeit their general tax deduction for R&D expenditure, being 25% for most companies, meaning the net cost to the taxpayer is about 0.185 to the dollar of R&D expenditure, assuming the companies may have made use of the foregone tax losses when profitable, and many never will be profitable. The situation gets even more complex when considering the impact of R&D claims on franking account balances and future profit distributions. The release of the transparency reports and subsequent debates also come at a time when the government will undertake a strategic examination of Australia's R&D system, as announced in the May 2024 federal budget. It will be interesting to see whether this publication of claimant data is considered as part of this review. Regardless of anyone's thoughts on the disclosure changes, they are now the law. Stakeholders and those involved in the R&D tax incentive should be aware of the current requirements for the ATO to publish data. Should you wish to discuss this matter further, please contact our office. Thank you.